Welcome to the Expat Focus podcast. In this episode, we'll be talking to Simon Hilton, Senior Foreign Exchange Consultant at World First and the Expat Focus Foreign Exchange Partner. We'll be discussing the difference between banks and currency brokers and how expats can get the best rate while safely transferring their money abroad. Simon, welcome to the Expat Focus podcast. Thank you for joining us.
Thank you very much.
Okay, Simon, for those listeners who don't know who you are, can you give us a bit of background about how you ended up in the world of foreign exchange?
Yes, of course. I graduated from Reading University with a history and politics degree, and I joined World First back in 2006 in September, and I've been with the company ever since. We started out quite a small company, and I've grown to about 80 people now in our London office, and also we've got an office in Australia as well. So during that time, we've seen quite a lot of growth. But I don't really have a finance background initially. As I say, I studied history and politics, but came across this company and have been with them ever since.
Okay, yeah, there's not really a sort of foreign exchange course that you can follow at university, is it? Or at least not that I'm aware of.
No, not really. No, I mean, you can study economics. I suppose that's probably the most relevant thing. But really, as a job, you get a lot of experience on the job, really. Once I started with a company, you then need to undertake FSA exams, so with the Financial Services Authority, to be able to advise clients on more specialist products such as currency options, which fall under the remit of the FSA. That's the main thing I suppose you need to do. Yeah.
Okay.
To do my job, yeah.
And what is your specific role at the moment?
I'm a senior foreign exchange dealer at World First, so I assist private clients. Such as your listeners, really, who are emigrating abroad or regularly transferring funds from one currency to another. So there's all kind of requirements, really. Often people just make one big move of all their funds in one go, or they have houses around the world, and they regularly send money back and forth.
Okay, so you're dealing specifically with private clients. You don't handle corporate or company.
I do assist a few small corporate companies, but we have a specific corporate department for that. But that's not generally something I do on a regular basis, no.
Okay, let's get started with some other questions, and a very basic one to kick off with. What does a foreign exchange broker do, and why should an expat consider using one rather than their bank, for example?
Okay, I suppose the main reason why you should use one is a cost saving, really. Now, when you go to your bank, a retail bank, you generally get an exchange rate, which is a retail rate, and the difference between that and the commercial rate is up to 3%. So on a large transaction, that can make a really big difference to the amount of currency you receive at the end of the day. So that's the main reason why companies such as ourselves exist. It's a cost saving, really. But on a more personal level, we also exist as a personal service, and we can give regular updates to our clients and keep them informed of movements in the rate. Because if you don't time your transaction as best as you can in line with the market, you are subject to fluctuations in the rate, and that can make a big difference as well on the amount of currency you receive. And if you don't, the risk of that really on that as well is that if you don't keep an eye on the exchange rate, something can cost you a lot more than you initially anticipated. And this is particularly the case for a house purchase. If you need to buy a certain amount of currency and you haven't been watching the rate, it comes around to the time you need to make the payment, and it costs you maybe 2 or 3% more than it needed to have done.
Right. So just before we get on to some specific expat scenarios, what sort of things affect the currency exchange rate, or at least what are the major things? Is it simply a question of interest rates and inflation, or are there other factors which come into play?
Yes, interest rates certainly do play a part in this. The current interest rate between one currency and another currency, such as the interest rate in the UK and the Eurozone, that will definitely affect the exchange rate. Also, the perception of what the interest rate is going to do in the next 2 or 3 months can also have an impact. So if we expect the interest rate in one economy to rise, we'd expect the value of that currency to also increase. Conversely, the same is also true. If we expect the interest rate to fall, we'd expect the value of that currency also to fall as well. So that can certainly have a correlation with the rate as well. But it's not just that, it's also economic data that comes out, such as poor growth or poor retail sales figures, poor house prices, can also have a negative impact on the currency's value.
What impact are other things that we see in the news, like the financial crisis in Greece having? Is that having a big impact on the euro and people looking to transfer money abroad from the UK?
It is having a big impact, certainly on the euro at the moment. There's a lot of uncertainty about Greece. We are expecting them tomorrow to hopefully pass a new range of austerity cuts in the Greek Parliament. But it's very uncertain at the moment whether that will be passed, because there's very much widespread opposition in Greece about that being passed. So that is having a big impact on the euro at the moment. The euro-dollar rate particularly has moved a lot over the last few weeks, and also the pound-euro rate has also moved lower. Now, if a country were to default on its debts, which Greece could do if it doesn't pass these latest range of cuts, that would have a dramatic effect on the euro. So it will impact people, yeah.
Okay, all right. Well, let's look at some specific situations which expats typically find themselves in. Maybe we can begin with someone looking to purchase property abroad in another currency within, say, the next year, but who obviously doesn't want to pay more than they have to when the time actually comes to transfer those funds. What ways are there to guard against the volatility of the foreign exchange markets in a case like that?
Sure, of course. Okay. And once they know the dates they need to send the funds across, so generally, for an example, you're buying a property in France, you generally pay a deposit of about 10% within a month, and then the rest of the balance in about 3 months' time afterwards. Mm-hmm. So the options available to a client would be obviously just to wait until the transactions are due and buy the currency on the day, and that's the most riskiest option, I suppose, because you don't know what's going to happen with the rate between now and then. It could be worse. But you've got no way of budgeting of what the sterling cost is going to be if you're transferring pounds to euros, that is. The second option would be a forward contract, and this would guarantee the rate for a date in the future. All the client would need to do would be to put down a deposit at this stage of between 5 and 10%, and that depends on how far forward we're fixing the rate in the future. And then that guarantees a sterling amount for the euros they're looking to buy. So the advantage of a forward contract is the certainty. You know exactly what it's going to cost you. If the rate does worse, you don't lose out.
Okay, understood. And with regard to these forward contracts, specifically for buying a house, what happens if, for some reason, you don't buy the house in the end and the sale falls through? Do you still need to buy the currency, or is the contract just cancelled, or what happens in that sort of scenario?
Well, if it was just a matter of you delaying the property purchase, we can just delay the contract for you, which would be no problem at all. There's no cost to do that. However, if you weren't going ahead with the property at all, and you definitely wouldn't need the euros, we'd need to sell them back. And depending on where the rate was, you'd either make a profit or a loss on the transaction. Right. So that's something to be aware of. And we wouldn't recommend clients enter into a forward contract unless they were sure they were actually going to go ahead with the property purchase. Particularly in some countries such as France, if you put the 10% deposit down, it is almost very certain that you will go ahead, because the other party will have to compensate you if they don't go ahead with the transaction. Right. Okay.
Understood. And can you transfer funds before the end date of the forward contract?
You can, yes.
So there's a sort of window of opportunity available to you rather than...
Yeah, absolutely. Yeah, so for example, you told me that you were buying a property in France in December, and then actually the completion date was moved forward to October. You could certainly do so, yeah. That would be no problem at all.
All right, let's take a look at the situation in reverse now, where someone is already abroad, but they need to send money back to their home country, perhaps for a large purchase, such as a house or a car, but maybe more likely for smaller amounts on a regular basis, perhaps to keep up with mortgage repayments, for example. What are the benefits of using a foreign exchange broker in that sort of situation?
On those kind of transactions, the main benefit is usually a saving on the cost of making the transfer. If you make a regular transfer, say from euros to pounds with a foreign bank, they will generally charge you an international payment charge and also give you a retail rate, which is again around 3% wide of the market rate. So on smaller transactions, if it's just a few hundred or maybe 1,000 euros a month, let's say into pounds, you would often save more on the fees than if you use your bank over abroad, using a bank abroad. Sorry.
Right.
So again, we generally save our clients between 2 or 3%. The other advantage we do offer as well is that you can fix the rate for 6 or 12 months. So if you know you need to pay a mortgage in another currency over the course of a year, and you know what those payments need to be, you can fix that rate in advance, so you can guarantee what the cost of that will be, and so there's no nasty surprise if the rate does move subsequently against you.
Right, okay, understood. And in this sort of situation where there's regular payments involved, would it be typical for the client to set something up like a direct debit to transfer the funds automatically to the broker?
Yes, it'd be a standing order, yes. They can do a standing order to their bank, yes, that'd be absolutely fine. That's the easiest way, really, and it can happen automatically. So once they set it up for 6 months or a year, they can just let it happen automatically, and they don't need to worry about it each month.
And just while we're on the subject of regular transfers, I think we'd agree that if someone wanted to transfer a company or a private pension payments abroad, they might benefit from using a foreign exchange broker. But is that also the case with the UK state pension? And the reason I ask is I've heard that the exchange rates and the transfer fees used as far as the state pension is concerned are already pretty competitive. Is that correct, or have I got the wrong end of the stick?
No, they're generally about 1.5% to 2% wide, so they're not as bad as if you use your bank to do a transaction, as in it was in your current account and you're sending it abroad. However, they're not generally that competitive. So we'd always advise our clients just do a comparison, really. Just if they tell us the date they transferred funds across recently with their pension provider, we can always make a comparison to see what we'd have offered on that day, and obviously if we can save them money, that's great, and if we can't, that's fair enough. You can just stick with the way they're doing at the moment. Yeah. Okay. And now, with the greatest of respect to the foreign exchange profession, how do people know that their money's safe with a currency broker? Well, wasn't there a case not that long ago when a broker went bust in the UK? There was, yes, and I completely understand that. Security is obviously a primary concern to people nowadays, particularly the way things are in the world. Yes, there was a company that went bust, and they are a cash business based in Cornwall. So although they were involved in currency, they were kind of a different business to what a currency broker would generally do. As in, we don't buy holiday cash for clients and deliver it in the post, which is what they were doing, and they were speculating with client funds. So there is certain security there involved with using a company such as ourselves. We are FSA regulated, which means that they oversee everything we do as a company. You can check that regulation out yourself as well through the FSA website at fsa.gov.uk, and you'll see what's on the FSA register. Also, on the matter of security, any funds sent to us are held in a segregated client account, and the bank have complete lien over that, and that is completely separate from our business accounts. So if something were to happen to our company, your money would be completely protected from our day-to-day business accounts. Right, and just to come back to the FSA regulation there's a difference, isn't there, between being registered with the FSA and being authorized by the FSA? Isn't that right? And if you're authorized, then you have the extra protection, as you've just said, of client funds being ring-fenced and the company having sufficient assets to meet its obligations and so on. But that's only if people are authorized rather than just registered. Registered is simply registering with the FSA. It doesn't give you that the guarantee of the extra protection that authorized me. So people really need to check that their currency broker is authorized and not just registered, if that's the level of protection they want. That is very important, yes, and it can all be checked through the FSA website. So if you have any doubt about a company, always go to the FSA website, because that's always independent, and you can verify it yourself. Right, okay. Once people found a broker they're happy to deal with, what's the typical procedure for signing up as a client? Presumably people need to comply with certain legislation and prove who they say they are before transferring funds? That's correct, yes. They just need to generally open an account through the website of the company, filling in a short form online, and then the company will call them back within about an hour's time. That's correct. Due to UK anti-money laundering regulations, all currency companies are required by law to verify the identity of their clients. And all that means is just that they can check that they're on an electoral register, or they can see some documentation if needs be to verify their identity. If it's a UK-registered client who still reside in the UK, you can usually verify them very easily through the electoral register, and we may just need a copy of their passport or just the number along the bottom of their passport to verify their identity. And for clients based abroad, they may need to send a copy of their passport and a recent bill or bank statement via email to verify their identity. Okay. All right. Simon, I think we're coming to the end of our time today, but just before we go, do you have any last-minute tips on transferring currency which you'd like to share? Yeah, well, I'd always recommend that people certainly do their research and don't leave it to the last minute. That's the worst thing you can do, really. It's always good to have time on your side when buying currency. If you've got a month, it's always better than having a week, put it that way. And if you do use a currency broker, they should regularly keep you updated with the rates and try and time your transaction as best as possible. Okay, wonderful. Simon, thank you very much again. We look forward to having you on in the future. Thank you very much.
Thanks once again to Simon for joining us on the podcast. If you have any questions about transferring currency which you'd like Simon to answer in a future episode, please let us know using the feedback form on the Expat Focus website. Alternatively, if you'd like to contact Simon directly for a quote or to learn more about services offered, you can reach him through the online form at expatfocus.com/currency. That's all for this episode. If you'd like to subscribe to be notified of future episodes, please go to expatfocus.com/podcast and use one of the buttons there. Bye for now.